Hi and welcome to the Market Alert for Wednesday, 15th of June 2022. So stocks, bonds, oil and gas dump as dollar and VIX jump ahead of Fed. Yesterday is Fed day and it seems that the consensus seems to be 0.75%. We'll get to that in just a moment. And in case you think stocks have it all priced in, they don't. Now it's an interesting statement because I was actually going to say that they may have today's Fed announcement already factored in, but we'll have a look at the charts. That should be able to give us a clue. US stocks remain cautious and bonds tumbled on the eve of FOMC Asia Pac market open. That's the overnight market. They were fairly stable actually. More bonds selling with Fed price for 75 basis points with the risk of Volckering. And what they mean by the risk of Volckering is Volcker, who was the Fed chair in the 80s. I think he increased rates to around 18%. He was on a mission and he didn't stop. I mean, you're not going to get to 18% these days. There's no chance that he'd be lucky to get to 3%. But that's what they're talking about, these 75 basis points. And that's for this month and for next month as well. In 2019, rates, I think, were 2.9% or 2.5%. And we're going to be 1.5, I think, aren't we, after today? But that's on the basis of a 0.5%, so 1.75. So it must be 2.5, not 2.9. Must be thinking of something else. So, actually, I can show you. Because this is where I actually saw it. Yeah, it's 2.5%. So you can see they tried tightening all the way through to 2019. And then it went pear-shaped and they had to do this. And you're probably going to see that same pattern once more, except it will be total destruction of the US dollar this next time because it'll prove that they cannot increase interest rates. So just keep an eye on this one as we go forward. But tonight is, the forecast of 0.75%. They may just play it safe and go with the half. Just wait and see what the market's reaction is. And that's going to be at 7 p.m. That's BST time, 7 p.m. Everything else really isn't of that importance, to be honest with you. I mean, Lagarde's out at 5:20, but the European Union haven't even started increasing interest rates to combat inflation. They're still at 0%. Staggering. Absolutely staggering. I mean, that's confidence for you, isn't it? Otherwise, it means that, and more likely the case, that the European Union is so fragile, or the economy is, that they can't increase rates because the whole thing will implode. Amazing, isn't it? 0% still, with inflation running between 8 and 10%. On the gold-silver ratio, we're starting to see a bit of a decline in this. This is going to be an interesting one as well tonight because, of course, the dollar is going to dominate. As you can see here, I've got a chart now of it. We're up at 105. We've taken out the recent high, which is why the metals have been hammered, or one of the reasons why they've been hammered to the downside, and it's certainly going to spike to the upside. It'll be interesting to see once they've increased rates, and I think this was the last peak when they increased rates, and then we saw the dollar decline, so we may see that, and then the opportunity for the metals to actually move to the upside. Although it could be interpreted that a 0.75% increase would add more bullishness to this because it shows that Powell is prepared to go Volcker and continue to increase rates, which will be bullish for the US dollar. Let's have a look at the Dow. So yesterday's action, well, it was still to the downside, but certainly a narrow range, and we can see that the volume was more or less the same as the previous day, so a bit of demand coming into the market there. We're oversold at the moment as well. Is the 0.75% factored into the market? I don't know, because this is Friday, obviously, with the CPI. Then we had the sell-off on Monday, Tuesday, the market fairly sideways. We could get a bit of a dead cat bounce. That's all I can say, but certainly not over on the downside in the bigger picture. But when you get so many down days, you are likely to get a couple of days where the market will move back, called the dead cat bounce, before it then resumes to the downside. So be aware of that when the markets open this morning at 7 a.m. in Germany. Yesterday in the 30-minute charts, you can see here, this is the kickoff, isn't it? 1400. So this is the 2 p.m. bar. and then you can see the Dow just again came under pressure with a bounce, and that's what I'm talking about. You'll see in the daily chart, you'll get the old green bar, but then the market resuming on the downside. So be prepared for, if you're getting used to taking shorts, there will be a day when the market will move back to the upside, albeit temporarily. The market's currently gone to the DP. Nice move on again on the overnight. I mean, just have a look at the move here from just towards the close of last night up to the high, and you can see there 375 points in this move for the overnight on the Dow. It's a big move, a really big move, and then you can see that prices have hit the DP and are currently making their way to the downside. So I'll be looking to see where this is likely to find some support, and it ties in the 89% is just by yesterday's low. The low very important for these markets at the moment. And in the German DAX, we've got a similar picture here. You can see yesterday trading down to that 13,271 level, managing to come off this, as we can see in the price action, but again overnight starting to look weak once more. It may be a case that they move the market down during today and then bring it back tonight if Powell actually goes for 50 basis points as opposed to 75. So there could be a tactic here of moving the markets down. They're expecting 75. That would be bad news. 50 would be good news and bring the market back as well. You have to look at all of the variables and also previous times when they've done this and what happens before. You can actually start to see the pattern. So that is another pattern that has happened before. 75 basis points. Well, actually, the last time they increased by 75 basis points was 1994. So you can see that they're trying to be serious about it and they put it out there. But whether they do that or not remains to be seen, and we won't know until this evening. So yeah, the daily chart, that 13,271 is very important for the German DAX there. And in the 30-minute chart, for yesterday, again we had the move up in the futures market from 7 a.m. and then we just made our way down. We were overbought at that point, crossover, and then we moved to the downside. We then found demand and we brought the market back to the close and the 50 EMA there, which you can see, and again we switched to the downside and followed the Dow down once more, being oversold and then going back to overbought and then back to oversold at the S2. Again, watch the low for this morning if there is any attempt to move prices to the downside, and also again you'll see that the DAX is tying in with the low at the 89% retracement. In yesterday's 5-minute chart, just drag it across, let's have a quick look. And you'll see that yesterday morning it was just a one-way move to the downside. We had that futures move, as I mentioned, in the 30-minute chart. Then prices came down from the open. This is the open. We showed some divergence as prices moved lower. Then that was taken out, and then the momentum started to switch. We came down to the BRN. We got some buying, crossover, and we traded back up to that 20-bar moving average, which I've spoken about in the alert with regards to continuation moves. So the market's come up, traded to the 20-bar moving average. We don't quite become overbought, but we're at the DP. The market starts to close back below the DP. They want to keep prices above the DP level if possible, because prices above the daily pivot are bullish, prices below are bearish, and that's what happened next. And we see the market continue to move down. We had just 2 green bars in this down move as it continued to the downside there, quite strongly, down over 100 points from the BRN. Actually, it's 200 points from the BRN, because this one here is 13,400. That's that one there. And then we've got 100 points there and 100 there, so it's a 200-point move to the downside. Notice this volume here. These are stunning, these are, when you get these. They let it creep down And there's no real selling. You can see from the volume, there's a few bits of demand on the way down trying to hold prices. And then all of a sudden you get this huge volume coming in, stops the down move, and then you get the retracements as the market then starts to make its way back to the upside. And again, trading to the 200 MA this time before prices actually then go south once more along with the Dow. Here you can see that in this area here we've got a higher high there and lower on the stochastic as well. So when we go back to the 200 MA, we've got divergence and also, like I say, a drop off of momentum there. And in the S&P, you can see that we've got from yesterday, we've got demand coming in, we're oversold, but again, it's the interest rate decision today that's going to determine the direction. Again, a bit of weakness there on the overnight. So we saw prices moving higher as well. Again, same issue, trading to the DP, now back below it, but there's a bit of demand coming in and we're heading to the oversold area. Like I say, it's going to be interesting. There's only the two options here, that they bring the market up and then they can slam it down for 75 basis points, or they can move it down on the prospect of 75, get only a 50 basis point and bring it back. So that's the options for today. And then this afternoon it will trade sideways, that I can tell you now, but that's for the morning options. So yeah, yesterday the S&P moving up also just above the DP and to the 50 bar moving average, overbought, and then you can see it's switching, and again we get a bit of a bounce around lunchtime. Then the US kicks in and we're sent down until the 9 p.m. close there. In the FTSE, yesterday daily chart, we're down at just up below the 89 now, and also taken out these levels to the left there at 7154. Straight down in this market for the last few days for sure. Interestingly, let's just have a look and see how many points this has actually fallen from the high to yesterday's low. Down 500 points on the FTSE during the last 4 trading sessions there. And in the 30 minutes, again, we were moving higher, became oversold with divergence in the 30-minute. The market moving up with the German futures, and then we opened at 8 and the selling came in, and that was the way it was until demand came back in after the market became oversold. Crossover in stochastics, and then back to the DP where the market failed, overbought, and then move lower. And at these areas, you can move down to the smaller time frames of 5 minutes and 1 minute and time the trades in these areas. In the sort of medium term where you've got a 30-minute chart, if you're watching the 30-minute, watch for these areas, watch for the overbought and oversold areas, and then you can go to the smaller time frames to actually time the trade. Call it the Russian doll approach, just work your way down from the big doll to the smaller doll, and then use that to time the trade. So that's what we've seen there. And at the moment, we're coming back below the DP there as well. So once more, if I was watching the FTSE, even before the market opens, I'll be looking for these areas as really good areas of potential support, particularly here as well, because you've got a nice retracement before the market moved to the upside there. And in the yen, this also finding some support at the moment as the dollar index had a breather yesterday. You can see prices sitting at that 62%. The 50 EMA got demand there as well. And we're heading back down to sort of oversold territory. But again, the currencies are waiting for those interest rate decisions. Yesterday, though, we can see that we had a move up in the overnight market in Asia. We've got a nice retracement there of 89%, so we're overbought with supply, and then the market moving all the way down 150 points in that sort of area. Once we closed below the DP, again became bearish, and that's how it played out. And then of course when the Dow opened, and the US markets in the afternoon, prices also moving lower. Then in the evening, a nice retracement there, the momentum switching and then moving back overnight again to, like I say, the DP. And at the moment, making its way back down, or has been, So if we just go from here to here, you'll see the market stopping at 78% as we come over sold there. The pound, different ball game. Again, yesterday smashed to the downside, 120. Massive low for this market. If you look at the monthly chart there, the last time we got to this sort of low was in March of 2020 when COVID hit. And the low there, let me just draw it in. There's no point in, oh, it's there. It's already in there. You can see there, 114. I thought I'd drawn it in. There you go. You've got 114 is the low. And in between that, you've got an 89% of 117. So the pound being hammered. Well, all currencies are being hammered because of the inflation and devaluation of them. It doesn't really make any difference what the central banks do. They're all just declining together. It's just that the dollar, obviously being the reserve currency, is a stronger one of a basket of all global devaluing currencies. In the 30-minute for the pound yesterday, again, not unlike the yen, except there was divergence. Again, you can see prices had moved higher up to the DP. And inside of here, you've got the retracement back. And then once we close back below the 5-bar moving average, it's all the way down for the day. And again, you've got that similar picture at the moment where we've got a bit of a pullback going on and trying to get back to the DP at the moment. But I expect this will be hammered once the dollar index moves higher on the Fed announcement later tonight. And then finally, we've got the metals markets. I'm surprised that they managed to hold silver yesterday at 78%, given the dollar was strong yesterday. But they did. A nice bit of volume there as well. And we're up on the overnight. Again, tonight's going to be the determining factor, and also, of course, the 1 p.m. fix. Look at yesterday's 30-minute chart. You know, it goes without saying, doesn't it? You don't have to look at the time on the chart. You can see it every day. Traded to the Monday low, market retraced, and then has managed to move up on the overnight, and is still doing at the moment. Maybe because, like I say, it could be priced in. The rate increase already priced in, and this is going to be bullish for silver. Well, it will be, because if you go back to that dollar index chart, like I say, the May increase is likely to have been around this area. What was the date on this? Let me see if I can find the date. It's down there at the bottom, 13th of May. Yeah, we're at the 15th today. So that will be following the last rate increase. In fact, it's even easier to find that by just going to this. It was the 4th of May when they did the last increase from 0.5% to 1%. So it's a week later than when we're seeing that happen. So there is a good indication of what's likely to happen. The dollar increase, go up for a few days, and then make its way down as we saw last time. And again, this is why it's important to go back and look at these things so you can see where the patterns are in these markets. So that's silver. Gold was hammered yesterday as well. Once more down to 78%. We're coming to oversold again, and in the 30-minute chart you can see the 1 o'clock fix straight down, but overnight the market's picked up at least 78% of this, if not 78, on the way back above the DP as well. There's going to be a rollout of stocks into the metals at some point as well, because if the markets continue to move lower, rates continue to increase, people are going to keep the money in the markets. Two reasons. One, why bother? Because you can get a bit more secure. If the market's going down, you're better off with 1% in the bank if you can find it than the market turning negative. And the same for the institutions. They'll roll out and move into the into the metals markets, because if inflation continues, then it's going to become even more important for the precious metals. And I just made a mistake. I noticed that I was looking at the silver chart again, and I went to look at the 30-minute gold chart. There you go. I knew it had been hammered. I thought it looked a bit odd in that silver chart. Yeah, so gold there in the 30-minute, absolutely hammered yesterday. There's the daily chart of gold moving to the downside. So I looked at the wrong one. The trouble is, of course, they trade in tandem most of the time. So 78% retracement there. A lot of volume yesterday as well, nearly the same as the previous day, but less in range. So some buying in there, which is why you're seeing this moving up at the moment. So apologies there. I wasn't paying attention as I should have been. Okay, I think that's it for today. I know these are slightly longer than usual, but there's a lot going on at the moment. So again, apologies for that, but a lot of information to cover at the moment. Okay, that's it for this one. Let's see what the Fed does tonight. I can't wait. I will be sitting here and glued for that 7 p.m. release to see if he's got the balls to increase rates by 75 basis points or not. Okay, have a great day. As ever, thanks for watching. See you in the next one.